Thank you, Karthik, for that introduction. And there is a quite story behind that name. By the way, it's called we call it as EPIKINDiFi and not INDiFi, but feel free to call it INDiFi. As you know, nowadays choosing the name of the company is quite tough because it is not only the spelling, but it is also the pronunciation which is taken. So EPIC is what we like. When we went there, unfortunately there were companies with similar names. Then we liked INDiFi, which is for Innovative Digital Finance, and we went and saw, again there were companies with similar sounding names or words. And then we said, why not combine the both, EPIKInDiFi, and we were third time lucky. So that's how the name came. So today's topic that has been given to me is digital NBFC of tomorrow, and I'm sure there's a large gathering of NBFCs here, and I'm sure it's a quite debated topic, and different people have different views. I will try to give my perspective, but like with anything which is in technology, I'm sure as it evolves is when you get the right picture. So before I actually say what is the digital NBFC of tomorrow, if I would like to spend some time as to what is it today, what in my opinion, how does it look? So some people would say that I have an app for my customer. Is that a digital NBFC of tomorrow? Some say that I have digitized process in credit underwriting. Is that a digital NBFC of tomorrow, or is it a mix of all of this? So the way we look at it is, today you look at the industrial lending model. I would say it's three businesses in one. It's a siloed approach of a back office, you have a middle office, and you have a front office. Back office does the innovation, come out with the product offerings. Front office obviously is interacting with the customer, getting the data, all the paper, supporting documents, pushing it to the middle office, which does the processing, underwriting, doing various checks, and ultimately disbursement. But ultimately, if you look at the way they are structured, there are three different silos. Credit team will come up with its own operating policies. Sales will have their own operating model. And ultimately, what customer gets is some of these three equal parts. Different departments have their own policies and processes, and when you sum it up, that is the experience that the customer gets. And so it is not that there are no digitization today. There are sales or RM with the customer may have an app, credit may be underwriting. So there's definitely use of people and processes and digitization in today's lending as well. But ultimately, I think it's more of one size fits all, which I believe will not, is something which is not suitable for the future of tomorrow. So if you look at today from a MSME point of view, there are 63 million MSMEs today, and about 20 million MSMEs are being served, in the space of credit. So there is a deficit of, or there is a set of about 35 to 40 million SMEs that are still looking for credit. How do you do it? You can't do it with a one size fits all, right? So let's say if I take a example of a grocery shop, a neighborhood grocery shop, which doesn't even come in a GST bracket. How do you go, and if you set up a credit policy where you say, okay, show me your last 3 years, audited financials, give me your GST details, that's something you can't build your credit model. So essentially what it means is the segment that needs credit, you need to understand the segment. You need to look for digital data points which are applicable for that segment. Maybe for a grocery shop, the best way to do is, obviously you're going to discuss his informal khata, his stocks, what he is maintaining in the shop. But another way could be to verify the data, could be that look at the neighborhood, look at the density of population, density of apartments, density of houses in that neighborhood. Based on that, try to arrive at a footfall of the shop. And based on that, you predict what's his income could be. It could be a trend in a region in that specific neighborhood, or you can expand it to a particular larger geo. and triangulate that with what information he's giving. So what it means is, what you need to do is you need to go beyond digitization of processes that are there in different departments. You need to start grounds up. You need to look at what the customer needs, what are his attributes, how do I get those attributes from some alternate source of data, build a credit model that is suitable for that particular segment. So, and the philosophy that needs to be there is, do as much as possible, do on-the-spot decisioning. In today's world, if you take an application and send it to your middle office, and by the time you go back, the customer would have gone to some other institution, some other lender, and it is quite possible that if they serve him first, they capture the customer and the other one is left wanting. So the digital NBFC of tomorrow has to be where your philosophy is, do on-the-spot decisioning. For exception cases, you can probably put into a manual queue, but your entire product segmentation, your policies has to be for that particular customer and based on points, data that is available for that customer, so that when the sales or the RMs, when they are dealing with the customer, they are not just there to capture the data, but they are there to actually empower to approve the loan and disburse the loan. And if there are exceptions, it can obviously get into the traditional lending model. Again, another aspect is real-time risk-based pricing. Lenders are in the business of, risk. They take risk, and it is that risk which fetches them, interest, which fetches them money. So there is no one-size-fits-all. One grocery guy maybe he's suitable for a loan at a 15%, or someone else may be suitable for a loan at a 30%. So it is a risk-based pricing. If tomorrow's NBFC should be able to on the spot decide a product that is suitable for that customer and offer him then and there, rather than having a bouquet of products and then try to force fit. So how do you do it? If you look at the way I envision the future NBFCs, instead of a back office, middle office, and front office, it is based on customer experience. It is based on a platform approach, and obviously there is an angle of upskill workforce. So what is customer experience? As I said, customer experience is your thinking needs to be fresh, grounds up as to which segment you are targeting. Build rules, build alternate data sources for that particular segment, automate the entire process right up to disbursement. And how do you do that? You can only do that if you take a platform approach, where the platform gives you the capability to have, sort of, if people would have seen Lego. So you have small building blocks, and you can make your own shape and forms. You can make a car out of it. You can make a ship out of it. So a platform which gives you the capability to do at a micro level, let's say verify an ID, verify GST, verify a bank statement, verify other financial sources of information, something which gives you the freedom, and to the business, not IT. It gives the freedom to the business to choose from that bouquet of capabilities to create something which the customer needs. And if you look at upskill workforce, I heard earlier this morning Mr. Gupta from NABARD speaking about human touch. So what is the future? Is there no human involved? Is everything going to be automated? I don't think so. So the roles of people will change. The roles of people from being an operator of the system would change to being trainer of the system. So if you've heard the story of Amazon, they've used AI and ML. They used to use AI and ML for their recruitment, and they realized over a period of time that they're not recruiting any females because the algorithms were rejecting all the female candidates. And then when they analyzed, they realized that historically, most of the men, it was men who used to apply in Amazon, and that's how the algorithm learned, and it used to reject. So you will see more and more people will become trainers of the system, where they analyze the past data and see what the trends are, and then train the system to deal with the future, rather than going through a whole IT change to improve the system. So that's how I see it as a future. based CX platform and an upskilled workforce. So at Epic, what we have done is this has been our philosophy, where we have built a system which is where the idea is to empower the business to build what they need for the customer rather than going through a technology change. So a platform comes ready with all these features where you can design the journey for the customer, you can design the journey for the credit. It is connected with 60 plus data sources that you can use. You can build loans for a self-employed personnel, you can build loans for a salary employed, you can do an affordable housing, you can do a vehicle financing, you can do a complete end-to-end SME. So with that, what I will do is nothing better than customer talking about our platform. So I will just end it with a video of our customer who talks about who have launched a next-gen digital lending platform of tomorrow today, and I will leave with that. Can you please play the video?
So in Chola Finance, we recently launched home loans as a new product, and when we decided to launch the product in a HFC as a next-gen digital HFC. Our intent in going digital was that we should be speedy and accurate in data capture, so that the data can be used in analytics to understand our customers better. And for that purpose, we did a RFP and we shortlisted Epic as our partner to design a completely digital process from loan origination till disbursement. Has been able to understand our aspirations and design a system which is customer friendly, easy to use. The system has helped us increase our logins, increase the speed and accuracy of data capture.
One of the bright prospects we saw was working with EPIKINDiFi, who have a fairly robust platform in place. And we felt here was something where it was the right fit from the kind of innovation this platform was bringing into the NBFC space. It has been an extremely positive experience for us. I think in the past 6 months we have got the whole platform conceptualized, designed and rolled out. Our customers are getting more than 50% logins, but in some cases more than 100%. Feedback has been extremely positive. Disbursement numbers growing in some parts more than 100%. Productivity that our field force has using this platform, that has been a huge jump. And from a pure technology maturity perspective, the whole application today has more than 60 different interface points that brings a seamless experience for the person or the party we are dealing with. Can have a varied workflow for the different kind of housing finance products that we offer. Ability to work with different kind of payment and transaction organizations and do all of this in a highly paperless kind of process. I think that's the key benefit that we have seen by going onto this platform. But here is a win-win situation for somebody to get something out of the ground a lot more quickly. At the same time, be able to bring a significant level of maturity in the process of delivering a housing finance product. for the customers across the country.